Well, I want to welcome everybody out for the ASNA WASDE April report. And as you can see, no Sterling this month. Sterling, I won't give away his location, but he might be wearing some Mickey Mouse ears, riding the Space Mountain ride right now. If you get on his social media sites, I think you can pinpoint right where he's at. But lucky for us, we've got Cody Gerlach joining us from Bar Chart. And Cody, you're up out of Des Moines, Iowa. Our paths have crossed a lot in the past, and in some past businesses. You go deep into the in the ag business. Tell us a little bit about your path to Bar Chart.
Sure. So I was born and raised in New Jersey on a cattle and hay farm, which not many people believe there are any of those in New Jersey, but that's how I got my background in agriculture. My dad still farms there today. I went to college in Texas and started with CGB shortly after as a grain merchandiser trainee in Tulsa, and moved around with CGB quite a bit over a span of about 10 years with them. Was largely for the first 8 years of my career focused on producer origination, the specialty contracts, options, hedging, that type of thing, coming up with producer plans on how to merchandise their own individual grain, and worked with Brooks and his team quite a bit on that throughout my years at CGB before he joined DS, and then consequently AgriSompo. So we worked together. We've been to trade shows together. We've done producer meetings together over the years, and have worked with him and his wife Anna for quite a long time. So good to be back and good to see you again here, Brooks.
Yeah, good to have you. Now, I was going to mention, Cody, this is usually, and the attendees can tell you this is kind of a coat and tie affair. You're a little underdressed, so I hate to put you under the gun like that. But
yeah, no, my suit and tie are at the dry cleaners right now, so I had to make a game plan decision right there.
Well, I'm absolutely joking with you because I'm usually the guy in the sweatshirt and kicked back, but I am in Washington, D.C. today. I'm talking a little farm bill talk, crop insurance, and hopefully making an impact out here. So I am ready to lose the tie, though, as soon as I can. Cody, what we typically do here is we kind of lay out the groundwork to what the market thinks this report's going to be. And I'll start off by saying the April WASDE report is not one with a lot of fireworks. When you look at it historically, it's one with very low volatility, and it's a weird month. If you joined us for the March 30th, actually the March 29th report, this a couple weeks ago when we had the prospective acres out from USDA, we talked about that kind of being opening day for new crop. And here comes the April WASDE, and we're again focusing on old crop. So there's not a lot of new crop news here, with the exception of maybe some South American tweaks to final production, maybe a look at their corn production. But to lay out the groundwork for you, I think it's good to kind of get some visuals. First, I'll start with some winners in the market. The winners have not been in the protein side as much as they have been on the energy side. Let me share a screen with you here. See what I can do. And of course, we'll talk about crude oil right off the bat. And the crude oil chart looks pretty favorable. I wish we had something like this in corn and beans, Cody, and wheat. But of course, crude oil has taken off. A lot of this recent activity has to do with some geopolitical issues going on in the world, especially over in the Mideast. We'll see what happens. It's cooled off a little bit the last 48 hours, but still a really nice gain for crude oil over the last couple of weeks. Another winner that we've got out there comes in gold. And I think gold has reached some all-time highs here. And I know we've got some viewers out there that have some interest in this gold market and have followed it for a long time. But another impressive chart. Again, that's kind of a risk-on strategy right there with geopolitics where they're at. But 2340 on gold. Unfortunately, we come back into the realm of proteins and the world that we primarily work in, and things have not seemed so rosy. Let me see if I can get the next chart in here. Pulled this from JP Morgan. Cody, I think we're always looking for something optimistic. And JP Morgan puts some quarterly estimates out there. The first column that you see here is actually the last quarter of 23, so it goes back in time. And we'll just kind of look at wheat here, because I think almost everybody on here, as best I can tell, we've got 9 states represented so far with members on the call. But you can see there's a little bit of a forecast and a bump in wheat, and we'll see what the USDA has to say about that over the coming quarters. This takes us out over the next 2 years. We kind of know those last 4 are really a shot in the dark. A lot of things can happen. When we look at corn, we do see a little increase in corn price too, which surprises us. Now, I'll stop on corn for the moment, and we'll talk about what we expect to see in this report here in a few minutes. We've hung out with carryouts just above 2 billion, that around that 2 to 2.1 billion. Now, Cody, if you go back in time, we've seen a big change in carryouts. Not to put you under the gun, but since you were directly involved in this, kind of in the export world, big changes if we go back from 2020. If we go back to 19 and 18, though, it kind of feels like this market's returning to a 16 through 19 carryout kind of picture. Any comments on that transition?
Well, I think right now, President Biden has continued to keep up a lot of the pressure on China. I think that Trump really started in 2016, 2017 in regards to all the tariffs and all of the rhetoric around China. We really didn't see Biden come out and be as dovish as some might have thought he would be with China. And has kind of kept up some of the firm rhetoric with them. Now, it does seem like here recently with Yellen being over in China, there has been some, good discussions between the two countries, but there's still a lot of tension between the two. There's still that Taiwan is still kind of sitting out there as, when or if China were to attack them, I think that would be an immediate disaster for exports on grains out of the United States. But I think here we've kind of got back to a little bit more of a normalization between us and China that we saw in those early years, and kind of I think we're going to see that same kind of export demand, but we have seen Brazil increase their production tremendously from that time point as well, and have overtaken the U.S. in both soybeans and corn exports to China, which I think is just a big change from 8 years ago that we didn't see.
You brought up a good point, a couple of good points in that in those comments, and one of them this morning, one of the breakfast meetings was with Representative Gottheimer from New Jersey, your home state, and he's a Democrat. And I thought it was interesting that, I think we assumed whenever there was an administration change, we would see a little bit more of a dovish approach in regards to that relationship with China, and that hasn't necessarily been the case. And he listed China as, whenever he talked about our number one adversary worldwide, he mentioned China, and that really surprised me. I thought we might look at other threats, maybe lesser threats out there. So very good point. The other point is you mentioned South America, and the questions brought up a lot to us: is China buying less than they did in these 21 through 23 years in regard to this export number being as high as 2.7 billion? And you see we're down around 2 billion. Maybe they have. It's tough to know what China is buying and what they have. And what we do know is, and we talked about this, we've probably talked too much about it, but Ukraine exceeding production expectations during the war years, the last 2. Also, South America really coming on the scene. And to give you an idea, production in the U.S., 23-24, 15.3 billion bushels. While it seems small, Brazil's corn production in 20 was around 3 billion bushels. It's grown to around 4.39 billion. That's a number we're going to be looking for today to maybe there could be a little tick down in that production estimate. Remember, about 62% of Brazil's harvest on corn comes from double crop corn, which is in the ground now. So we're keeping our fingers crossed that maybe we see something there as well. But overall, I think this report is kind of signaling a decrease in carryout, which should mean good things for the market if you look at it through a logical standpoint. However, the market's factored a lot of this in, especially with that WASDE or the USDA report we had just a couple of weeks ago.
Do you
Kind of
think?
moving on.
Cool.
Go ahead, Cody.
One quick point on that. Yesterday, it looked like Argentina decreased their corn production estimates, and it looked like this morning CONAB did as well, coming in below some of the expectations. So, do you think we'll see the USDA trim any of those on this report, or is that something that happened too soon with Argentina and CONAB, and we may see that reflected on the next report?
That's actually been the expectation for the last 2 or 3 days, that we see some slight trims out of South America in whole. Whether it's enough to move the needle, I don't know. Of course, we know anything that's trimmed off of there will typically fall into our export category. And right now, it's kind of interesting. We're not looking for exports to move much past that 2.05 billion number. If we get any pop in there, it's definitely going to be supportive to the markets. When we look at soybeans, and I want to kind of cover these before we jump into the report. We've got about 5 minutes. And soybeans, really, I put oil floats the boat here because it's all about soybean oil demand. And when we look at meal, when we look at soybeans as a standalone commodity, things don't look so bright. It's oil that's kind of holding this thing up. When we look at soybeans over the last few years, we don't see a big change from last year. The expectation here is a 324 million bushel carryout. Not that much different than last year. However, prices are significantly lower. One thing I will mention is the meal situation has eased overall, or there is the expectation of it easing, mainly because a really good Argentine year that we hadn't seen in the last 3. And so when we think Argentina, we have to think soybean meal. That's our number one competitor. Now, I know I see a few of you on there from Kentucky, that Ohio River Valley place, Lower Miss. Argentina has a tremendous amount to do with the basis that you guys receive for early harvest beans. And Argentina's production being up may lessen those premiums that we see in August and September coming off the river system. There's also just the divergence in South America and North American bean. Looks like that's maybe pushed all the way back, Cody, to maybe October, November, where we used to see that as early as late July, August. Tell us what I mean by that as far as where the world gets their beans.
Well, I just, there's not enough production in these southern states in a big export program from the United States. I think back a few years ago, and you're not seeing enough production in these southern states to really feed all that export demand out of the Gulf in those early months, July, August, September. And then once you move over into really new crop harvest, as you move up along the river and we get into the Midwest, that's when you see a lot of that pressure hitting all those beans hitting the river. And it's just, it's interesting. It's an interesting thing. I remember back about 3 years ago, I was down in Louisiana and soybean premiums in the Gulf, we had low water, then we had a hurricane come through and we saw basis values go from $1.50 over delivered to some of our facilities along the Mississippi River to 75 under in a matter of weeks. That's almost $1.50 plus drop, almost $2 drop in soybean basis very quickly. So those inverses can get taken care of very quickly as well during that time frame.
And then with the overall just not having that strong demand at that time period of the year, I think it's really going to disappoint a lot of folks that are going to have those early beans. I think there'll still be premiums there, just not to the degree that we've had them in the past. Looking at wheat, this looks like a neutral report on wheat. There's not a lot of information out there. You can see the WASDE forecast right now is at 698 million carry out. And again, wheat's tough. We're putting 5 different classifications in wheat into one chart. If we miss one of these, it's probably going to come in the form of wheat. We'll see what happens. Taking a quick look at cotton, but cotton looks pretty vanilla in this report. Not a lot of change at all expected there. Acreage still at 10.23 million acres, which is considerably lower than what a lot of people thought. We saw that in the prospective acres report back in March. So you kind of get an idea of what to expect here in a few minutes. Cody, just as we're a couple minutes away from the release, let's take a look at markets. I'm going to let you share your screen and let's see what the markets look like pre-release and see what kind of reaction we get.
Can you see my screen here?
It's small. If you can increase it, that's great. If you can't, you can kind of walk us through that. I'm gonna, while you're kind of showing us where things are at, I'm gonna flip my computer over to the release data, and we'll see what happens here little by little.
Sure, I'll just kind of walk through these commodities one by one real quick. So up here in the top left-hand corner, I have corn. Front month corn, we're pretty much unchanged, down a quarter penny. July contract, we're up a quarter penny, but relatively unchanged on the corn front. We've got cotton down a little bit. We've got canola that's down almost 3% here today. And then the wheats are kind of taking it on the chin as well. Up here at the top, I've got Kansas City wheat. We're down about 8 cents on the front month, down about 6 cents on the new crop contract, the July contract. Spring wheat, we're down as well. And Chicago wheat getting sold pretty heavily here pre-report. We're trading at about 5.50 on the May, 5.65 on the July, down about 8.5 cents on both of those. As we move over here to the oilseed and oilseed products, down here at the bottom, we've got soybeans down about 12. Currently here is the reports coming out. We've got soybean oil down about 1.5, and we've got meal just basically unchanged here. Looks like here is the reports released. The market's not moving a whole lot. Seeing soybeans still right here around 12 cents down. Seeing corn front month down about 2 cents. So not seeing a ton of change here on these products. Wheat looks like it was kind of right where we were prior to the report coming out as well. So not seeing a whole lot of market reaction here to this report, Brooks.
Yeah, just to kind of give you some of the numbers that come out, I'll start with the wheat, very, very neutral. Our projected imports, we reduced those by 5 million, 140 million on a slower than expected import pace. All in all, that carryout number at 698, it was nailed perfectly. It was raised 25 million, and looks like not a lot of news on the wheat front. Let me switch over. We'll take a look at soybeans right now. Lower imports, lower residual, lower exports, higher ending stocks. That ending stock number looks like it's around 340 million bushels of leftovers or carryouts. And if you remember, it's a little higher than what we thought. It's not burdensome. I think 315 is where we were at this time last year, but it is an increase of 25 million from our previous estimate. So maybe expect a little sell-off in beans. How are beans reacting right now, Cody?
Beans are actually a little bit higher than where we were pre-report. We're down about 8.5 cents right now on the front month and down about 8.25 on the Nove contract.
I like having those live markets up there where everybody can kind of see how the knee-jerk effect occurs with so many of these reports, and then we get back into trading normalcy. Cotton ending stocks forecasted at 2.5 million bales. That's an 18% of total disappearance. Not a lot of change there on anything that we looked at. Right on the money with where we thought things would be. Let's take a look at corn here and see what I can find on core screens. I'm not quite as fast as Sterling is on this information, so you have my apologies. He's usually Johnny on the spot. So corn, which seems like we focus on corn when we have these meetings. Ethanol has been raised 25 million bushels to 5.4 billion usage. That's significant. We started off a few months ago thinking that 5.3 number was going to hold. 5.4 billion is where we're at. That's a good number. When we look at exports, foreign corn production, cuts in South Africa, Argentina, which Cody mentioned earlier, Mexico, and a couple African producing countries. And those were pretty much offset by EU production increases in this report. Not that any of those are big numbers that are going to change things. Continuation of a drought in South Africa. has got some production numbers cut there. I'm perusing these as they come out, and see if I've got a good carry out number here. Looks like worldwide got about a 1.4 million decrease from last month's estimate. Trying to compare apples to apples here and see if I can get a good U.S. carryout. I don't see that right in front of us, but I believe it would be down just a little bit, somewhere around 2.05. So a slight cut in what we expected to carry out. How's corn trading right now, Cody?
Corn's down 3/4 of a penny on the front month and green on the rest of what I'm showing on my screen right now, just basically unchanged or slightly above unchanged. Interesting on your ethanol number. Are you seeing ethanol plants in your part of the country bidding up, offering free DP? What are you seeing over there?
You know, they're definitely the leaders in bids. As far as like Ethanol Central in our areas around Mount Vernon, Indiana, Green Plains and Valero are there. They're bidding the most aggressively. They've kind of been the market maker. That area is a strange area because you've still got the rail bids on the CSX and the NS. You've got the river, the Gulf weighing into it, and then you've got ethanol. So I look at it as, I kind of explain this to the viewers, as a domino effect. Even though you may not be selling to the river or you may not be selling on the rail, they have some effect on what you get on the cash price. And yeah, we are seeing them being more aggressive. Those values anywhere from 10 to 20 over the May for nearby delivery. And looks like they're trying to buy as much as they can at the moment.
Yeah, seems like that over in Iowa as well. Seeing a lot of free DP being offered, seeing a lot of pushes going on the basis side. That says to me that the ethanol guys are crushing and have decent margins, and makes sense why the USDA would up that number.
Yeah. So, as we look forward, this is not an unexpected report. We kind of expected that blah type of report where we didn't get that knee-jerk reaction. Certainly nothing like we saw back on March 29th with the acreage out there. It's going to be really interesting. I think this weather over the next 4 weeks, whether it's in South America or specifically in the southern part of the U.S., is going to have a big contribution to where corn prices go. And as we look at how the calendar and the volatility patterns have changed, one thing that I think we know is December and January are now on the map for, even though we didn't see it this year, big volatility months with the South American bean crop coming off. I'm going to go out on a limb and say April is going to be another month with a lot of volatility. I think we could get some chances here. The forecast looks very favorable in Brazil, but whenever you look at how many bushels they're producing, from a worldwide standpoint, this double crop corn in Brazil can't be overlooked. So I think we extend that volatility period a little earlier in the calendar year on corn, maybe the last half April, May, and June. And of course, planting weather down in the South. And I know you spent some time down there in Louisiana. Are you hearing any news out of that area as far as the moisture levels? Are we looking at prevent plant creeping into the plans down there on the farm, Cody?
I think you're going to start seeing some of that for sure. My wife was down in the South. She still works for CGB and travels around auditing facilities for them, and so she gets into the southern states quite a bit. And she was talking with a couple of the people at the elevators last week, and she said that they're basically don't have much corn in the ground whatsoever down there, and it's April 11th. And that is very, very telling for that time of year down there. When I moved down there about 4 years ago, they were planting corn at the end of February, my first year.
Right.
So I definitely think there's some major planting delays with all the moisture they've had in the South, and we could see some acres come out of that southern production and move into soybeans or cotton for sure.
Yeah, if you followed along, Sterling did a great job on a Wednesday report last year talking about the missing 1.7 million acres.
Mm-hmm.
And as this weather stays wetter in the South, as the whole economic picture on the farm, wavers a little bit from where we've been the last 3 years, you have to think some of that is some of that's coming into play. Jess, you mentioned on the chat 8 to 10 inches over the last 4 days, and I think that was in Louisiana, if I'm not mistaken. Yeah, over the last 4 days. So yeah, likely some prevent plant definitely creeping in down there as you get a little bit later and later in the planting season. I think you'll have to look at the Dakotas too. You know, that planting window being shorter up there. It's a little different ball game on prevent plant up there than it is in the South. With you guys getting, so much rain normally, the Dakotas I think are also going to be kind of big player in where these corn acres come out at. Be interesting. And the other thing
I'm
is the offset in soybeans. I don't know whether we'll see that offset in soybeans this year or not.
Yeah, I'm still kind of, I know we will see regional areas where, like Louisiana and Georgia right now, they're extremely wet. They're having issues getting the crop planted. But I still, anytime I hear somebody talk about planting delays and that's a reason why the market should rally, I just automatically think of how big the equipment is getting, how big these planters are getting, how fast they can plant this crop going in now, especially across the Midwest anymore. And it just makes me kind of cringe anytime I hear the word planting delays and future rallies. I just don't think we're going to see that on a widespread issue across North America anymore with how big this equipment's getting.
Yeah, definitely increasing efficiency all the time.
Yeah.
Well, Cody, I appreciate you joining us. I'm not going to take a lot of folks' time. We saw what we saw. It looks like one last look at the markets. We got a mixed market on corn, which is largely what we started with. I see some red there in
Yep.
Kansas City. And when I look at soybeans,
We're
where
8 cents.
soybeans,
We're 8 cents
yeah,
off of where we were prior to the report. So it's
yeah,
definitely come back a little bit on the soybean side, but everything else is pretty much unchanged from where we were going into the report.
yeah. So pretty much as expected, low volatility, a little bit of a knee-jerk reaction, but for the most part, the status quo remains. But we appreciate Cody joining us from Bar Chart. Good stuff there on the screen, Cody. Glad things are going well for you in Iowa. And thank you for joining us for this month's report. And we'll see you next time around.
Yeah, it was great catching up with you, and good luck to everyone planting here over the next few weeks.